2006. My name is Malcolm Gordon, and today we're going to take a look at the price of oil. You'll remember in previous episodes of Chart TV that I was very closely following this sort of gently sloping downtrend, and I was looking for it to break out of the let me draw on the downtrending, to break out of this downtrending resistance line here, and then make a high low and then proceed to make higher highs. Well, it looks like the market has done exactly that. It's formed what looks like a sort of a W-shaped double bottom here, and it has busted out of its previous resistance at about 61 to 62 US a barrel, pulled back, made a higher low here, and then taken off, busted through the $62 a barrel level, and is now making a series of higher highs and higher lows. What's interesting is that the price of oil, and this is the light crude contract I'm looking at right now in US dollar terms, is making higher peaks and higher troughs, and prices touched the upper Bollinger Band here, and it is sticking to it like glue. We can see previously when price of oil tends to touch the upper Bollinger Band, it tends to stick to it like glue, as it has done along here. It then pulled back to the lower Bollinger Band and stuck to it like glue, then rallied up, touched the upper Bollinger Band, stuck to it like glue. All this time it was sort of using the exponential 20 period moving average as resistance. That's the blue line here. So at the moment we have, and the 20 period exponential either acts as resistance, as it did here in this gentle downtrend, or support, as it is appearing to do now. We can see that prices come back to retest the 20 period exponential, and then it took off like a rocket and continued to move up. Price is pulling away from the moving average, so I will expect, and it has moved rather quickly, rather suddenly, so I would expect a minor pullback, but in the short term I expect this market to retest the previous high of $70.85 US per barrel within the next few days. Once it gets there, I'm going to take a wait and see approach. I imagine that it might consolidate around those levels and then pull back and then look to make a higher low and then take off again. But it could also just keep on moving, barring some massive supply shocks, such as another Hurricane Katrina, or some like an oil worker strike somewhere. I don't see it conclusively busting through the 71 US dollar a barrel level too soon. I see it retesting it but not busting through it, but I'm going to take a wait and see approach. Interestingly, MACD is ticking up. It has given a buy signal back here on the 30th of December when price was closed at 61 US dollars a barrel. So it's been a pretty good indicator recently, and that is ticking up, looking to retest previous MACD highs. So I expect oil to retest its highs within the next few days, and then I'm going to take a wait and see approach. I imagine it will consolidate a little, form a higher low, and then take off again to make new highs. So we'll see how things turn out. But in the short term, oil is definitely in an uptrend. If we zoom out to the weekly, we can see that oil has retested the lower Bollinger Band, bounced off it, and is now looking to rejoin the upper Bollinger Band, where it has a tendency to stick like glue while it rallies into an uptrend. This oil is, in the longer term, still remains in an uptrend, and as we can see here, the uptrend is gaining steam. So expecting it to retest once again. This indicates that it's expected to retest its previous high of $70.85 US per barrel. MACD is even more bullish on the weekly chart, so looking good for oil. Well, looking good if you're long. Okay, thanks for watching.